Did they shut down the Chicago Mercantile Exchange to depress the price of silver? That's a question that has been burning among the minds of many silver stackers. We'll try to answer that question and digest the aftermath about this outage that occurred there. And we'll talk about what's next for silver's price as we explore. There's a lot of conjecture out there that the CME was shut down intentionally because of the excuse as to why it shut down. A cooling issue, just doesn't make a whole lot of sense to most of us who are not in the know about the technicalities of what's going on in the market and how things trade, and just how uncommon of an event this was at dubious timing. But we're going to get into some of what was behind this. First, I'm going to be referencing an article here from Vincent Lancensee that I think sums up fairly well as to what happened pretty much kind of right after this occurred. The massive outage at the CME Group halted trading across its futures and options markets late Thursday on the 28th of November, and this is after data center cooling failure disrupted the CME Globex platform, interrupting live pricing in commodities, treasury, equity index futures, and foreign exchanges during early Asian trading. So the timing of this is questionable, but the fact that it affected so many different markets and had an impact so widespread, I think, is part of our answer as to whether or not this was done deliberately. The CME first acknowledged the disruption on November 27th, and this is late at night, about a couple hours before going into the 28th, reporting that a cooling issue at Cyrus One data centers had forced a halt of all CME Globex, and the EBS electronic markets. The issue affected benchmark contracts, including crude oil, gold, S&P 500 futures, FX pairs, U.S. Treasuries, and, of course, silver. Now, Bloomberg's initial had an update on this as well. We're going to shift over to what they're stating about this. And this has been quite pretty remarkable. This is something that is unparalleled, and Bloomberg makes note of this. And the Chicago Mercantile Exchange Group proudly describes itself as a place where the world comes to manage risk. But obviously that risk perpetuated itself dramatically on Friday when the world was locked out of those servers. Trading on the futures and options was halted due to a fault at the data center, spilling over into multiple markets and affecting contracts covering trillions of dollars. More than 9 hours after the first alert appeared on the CME website on Thursday evening in the United States, the company said services were starting to come back. During the outage, there were disruptions to the S&P 500 index futures as well as the EBS foreign exchange platforms and everything from treasuries to U.S. crude oil. In Singapore, one oil trader said that when the initial alert was issued around 10:30 a.m. local time on Friday, they thought it was a prank because the trades and quotes were still streaming in, but a few minutes later, the screen suddenly froze, and they were booted out of the NYX platform. A trader in London thought he had a Wi-Fi connection issue with the go-to services as screens that would usually be flickering while wall of numbers ground to a halt, and traders had to seek out other options to keep trading and operating. It's pretty irritating. We wanted to price some equity index options, said Gerald Gunn, Chief Investment Officer at Singapore-based Reed Capital Partners. My provider is scouring for alternatives, but I doubt the liquidity would be as ample as the CME. We look and see the CME outages over the recent years. Well, we have seen a number of different ones, but very, very minimal compared to what happened over Thanksgiving and Black Friday here in the United States. In 2019, the future contracts were halted for 3 hours because of an outage. The New York Stock Exchange in 2023, some stocks halted after gyrations, and that happened around the market open time. There was a 3-hour shutdown at the NASDAQ and pre-market trading disruption, and the New York Stock Exchange had erroneous trading prints that occurred for less than 2 hours in 2024. But this one was 10 or close to 11 hours that occurred for the 2025 futures and options outage. Much larger, much greater deal, but probably couldn't have happened at a better time considering that trading was relatively thin that time. But we're going to talk about how that associates with silver here in a moment. I want to thank Summit Metals for sponsoring the channel. They're a great company to work with, and they were able to take orders during this time, obviously, and so they're going to keep going, keep pressing on. A great company to work with. Experience some great customer service for yourself by clicking on the link in the description below. Yes, indeed. Silver, it was influenced and it was also trading at near all-time highs. In fact, it was trading at all-time highs right when this occurred. Trading was starting again and popped up right back up, and then boom, the outage happened. It seemed questionable. Many people were posting about it all over different social media platforms and in the comments section of my videos. But what was this? Well, such reactions reflect how CME, which started in the late 1800s as part of the Chicago Butter and Egg Board, has grown to become an integral part of the global market machinery and a crucial part of traders' daily work. On average, in October, derivatives trading volumes amounted to more than 26 million contracts every day, according to data from the group. On November the 20th, open interest in CME's U.S. Treasury futures and options set an all-time high of 35.1 million contracts. About $1 trillion of notional value is traded daily in the E-mini S&P 500 NASDAQ 100 futures alone. So it is something else, a big day, a big event that has occurred when there was light trading. But leading up to that, there were some big trades heading into open interest in the silver market in particular, leading to prices moving up to record highs. And that is accounting to one fairly well-known, according to Profits Plus ID, fund manager, highly respected, who's put a big position in silver that is really kind of bolstering the move to likely a higher price. And that was leading up to it. And people think, well, this was done so maybe this fund manager, well-known, could buy more. But why would they take down the entire system in order to do that? And it would only raise conjecture 5 many, which would cause more people to get in thinking there was this manipulation occurring to shut it down. And I don't think if that's the case, it will grossly backfire because now we are seeing silver trade above $56 an ounce. And this video is being recorded just before the market open in Asia, which I hope you will join me for at 6 p.m. Eastern Time every Sunday night. We watch the markets. But now, on the tail end of this record high move in silver's price, anything could happen. So we're going to watch it live as it occurs. And it's back up and running again. But probably this was not done in a coordinated attack or a coordinated shutdown. I don't think the manipulators have that much power. No matter how big the banks are or anything, I don't think they do. And they would have had to have known with some foresight that it would cause this kind of disruption and this kind of speculation, this kind of conspiracies would fly all over the place, and people would start buying silver en masse. And I think people are, which means that it could mean that what's next for silver is a pullback, a pretty big pullback in price. But notwithstanding, many people feel that this big buyer, this big fund manager, I don't know who it is, but, likely that those positions are based off of open interest. And there's going to be more buying that's going to be occurring. Coinciding with the silver futures approaching all-time highs has caused this really a lot of questions. But I don't think it had occurred, and even I don't think it occurred because of that. In other words, I don't think they shut it down on purpose. The halt extended across asset classes and persisted longer than a similar multi-hour outage that we saw in 2019. And what we're seeing with silver's price continuing to, as soon as it opened back up, go up dramatically, a lot of people think, well, that's evidence right there. But the thing is, there's a lot that goes on. These systems are very intricate, even though there's multiple levels of redundancy in the systems there, because they're so reliant, and because it's not just any database, as one person had posted over on the X platform. And so there's a lot that goes on with 10 nanocond latency matching engines and distance DIST, because there's a lot going on there that's more than just putting stuff up on an Amazon Web Services. It's not just regular cloud computing here. And what could cause a cooling issue could be any number of different variables, considering how complex the systems are, that where the redundancy would not necessarily have an effect. In other words, one system fails, another system will fail on top of that cooling system because of the underlying cause, which we still don't know to this point. I do think there should be investigation to find out exactly what happened here. But nonetheless, I think that this probably is something that occurred for very good reason. We just don't know what that reason is yet, because too many things were affected because of it, as I had mentioned earlier. But I think silver's price is going to probably continue to climb, but we could see a consolidation period, a pullback, because of sort of the panic buying that occurred after this, thinking, well, what's going on here? And thinking that maybe it could be orchestrated. But 2025 has been a crazy year for silver, and it is the most unforgettable year for silver in the history of the entire silver market. Let me repeat that, folks. We are living in exciting times. 2025 is the most eventful year for silver ever. And it's not over yet. And we're getting ready to. We very well could push $60 silver before the end of the year. And we may see silver rise up above to an all-time high even when adjusted for inflation at the pace we're going now, especially with this large whale of a buyer. And who knows, many others are probably still buying physical as well too. Millionaires like David Bateman could still continue to buy to put pressure on the market, if anything, to send a message. I think that's something he probably would do. The reflections on the silver market really are independent of whatever any institution does. Silver exists for what it is, and I think that is quite profound and amazing. There's more to silver than just its price, that's for sure. So, let me know what your thoughts are about this event. I'm going to keep an eye on it and see if there's any other news regarding it. But I don't think, and I'm probably going to be in the minority here, but I do not think it was an orchestrated shutdown in order to suppress the price of silver. Let me know what your thoughts are, whether you agree or disagree, down in the comment section down below. Hope you found this video informative, insightful, and educational. Would like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.